All right. Good morning, everybody. It is what, 6:31 on Wall Street. We're gathered here today to do all things macro to uncover the best fundamental investment opportunities across global markets. My name is Wayne McDonald. I am the founder of QuantBox.co, but I'm also a classically trained Harvard economist. So I love everything that we do. Love going through the macro. If you're watching this on YouTube, you're watching it hours and hours and hours late. You can attend these live meetings or get the video earlier by trying QuantBox. The demo is only, or the trial is only $8 at quantbox.co. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Looks like I got to log in. Un momento, por favor. Oh, boom, fast. Okay, so the last video was Friday. Holy smokes, it seems like a million years ago. Holy smokes. Anyways, let's log into the cloud. Make sure you have the appropriate associated account. Ooh, weak coffee. Weak. Minions! That's terrible coffee. Fire a minion or something. All right. Log in, log in. Login. Keep them. Wow, oil down. Now we'll take a look at oil in a bit. I suppose you're probably interested in it, and it's down to the lower bounds of our technical range, which is kind of great because we were in the middle, and you can't do much in the middle. So now we're at the lower bound of that range. So we'll see if that'll act as support. We'll take a look at that. Let's just go into the new scatter plot. It's nice. You're like, but it's so small, Wayne. Well, if you expand this full screen, then it's the perfect size. I know, right? Yeah, you're welcome. All right, so let's get rid of the commodities and try to normalize this distribution a little bit. And what do we see? A lot of Swiss franc weakness and some dollar weakness. So there's some risk on in this market. Okay, you can see the German stock market up, Japanese stock market up, S&P and Dow slightly up, FTSE slightly up. But nonetheless, lots of kind of risk on. See, yen up, CAD Swissy, okay, dollar. So all the funding pairs being yen, Swissy, and dollar seem to be weak in the moment, and this is updated in near real time. Take out crypto, take out stock indices, start to see these distributions. So the biggest winner is only up 0.5%. So don't freak out, right? It's only up 0.5%, but nonetheless, smells like there could be some risk on. Let's take a look at some of these yen pairs. Okay. In a technical uptrend, here's the thing. What I'm worried about is that this uptrend. Oh, now my drawing tool won't work. I have a frozen drawing tool. Hang on. Control Alt Delete. Manager. Kill the Epic pen and task. Have to reboot it. Epic pen. There it is. All right, let's see if that'll work. Yeah, I think it'll work. Sweet. Okay, so this is very much going up, as you can see, it has been for the whole month of June. And I'm concerned, though, that we're running into a point in which it no longer goes up. We like to call that resistance because saying, the price of which it'll no longer go up takes too long. So we'll just call that resistance. And we can take a look at the technical charts to see if this seasonality is going to kick in soon. Okay. Not a lot of people long this. Look at 92% short. Okay. And lots of people short Aussie dollar as well. You notice that? They're short Aussie dollar and they're short yen. Nice little carry though. All right. Take a look. Take a look at this commodity. Let me go back to full screen. Okay, facing the same seasonality sometime soon, huh? You see that? So it's not that you sell because of that. That's only one component of what goes into proper analysis. But when you have a current strong uptrend, if you saw technically that you were running into a price in which bulls take profit and then maybe bears start to sell, then you start to, put that into your future projection. See, QuantBox, most of this is looking at what is now. It's like looking at a balance sheet. It's a snapshot of today. Where are we today? In this case, it's a snapshot of economics. It's not describing what the market's going to do. Remember, the market is different from the economy, but it's hard to make a fundamental decision if you don't know where the economy is. Okay. So, anyways, this seasonality is a little bit more helpful in the projection where if this technical trend was going up, but then let's say it did a double top, suddenly you would have more emphasis. Is that a short term short or is it going to be a longer term short? Well, it could fall all the way to September. Ooh, nice to know. Okay. Krishnan, I think your microphone's on. Anyways, that's how you want to combine these like this. Consider the seasonality a bit of a leading indicator. Okay. So, anyways, it's doing really well. Doesn't mean it'll last forever. Okay. Ooh, look at that already, huh? Look at this dramatic change in direction. 75% of institutional investors are long the euro and 80% are short the yen. So you would think this wants to go, you would think that this would want to go up. But what you also have to consider is when will these traders take profit? When will these 75% of long traders say, enough is enough? Give me my money. I want to run. When will the yen weakness end? Okay. And so when we use technical analysis, we want to identify the prices in which those things could occur. Okay. I think we'll look at pound yen technically and Aussie yen technically today. But I just want to show you that it's been very up for a while, like from January to here, right? To the end of May, it was up, 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 up. And the interesting thing is, we think this period of time is sort of slightly down to flat all summer. And all of a sudden, bam, okay, there's a big change in direction. And that's kind of the market swinging back to, what you would expect it to do. So, anyways, kind of interesting. So we have to decide, are we at the right kind of prices? In particular with euro, because look, only 55%, or I mean pound, Only 55% of the market is a buyer on the pound. Remember, we were looking at another one just seconds ago, and it was 75. So this is a weak, right? This is a weak one. So when we cull the herd, you got to go through after the sick, the weak, and the slop. Sorry, I've been playing Far Cry 5 again. Sorry. Cull the herd. All right. So let's get a chart going. There's that bottom, by the way, that we pointed out, you know, 2 weeks ago, um, with oil. Okay. So as we get closer to here, um, okay, like just a few days ago, we were here, which is much more in the middle. So I had it sort of like this is the top of a range, this is the bottom of a range. We're in the middle. I'm like, yeah, I kind of want it to go up, but that's not necessarily decent support. I think we could all agree this looks like better support. We're pretty close. We're at what, 68 and a half. It could drop down to 65 and a half as well. I don't really know. So the way I have this outlined is this is the top of a range and this is the bottom of the range of support. So it could do like one of these things. So in the, starting about now, ideally closer to 67. Okay. Around 67, you have permission to watch this market to become a bull. And really just expecting range to continue. But if you're going to be a bull, you want to buy low. Always remind yourself of that. Okay, I wanted to look at the yen pairs. I think I wanted to look at Aussie and pound today. Okay. Okay. So this is by definition the first level of resistance in the month of June. Remember, we know this is a bullish market. We know that. What we're concerned with is prices in which bulls would take profit, because we know seasonality has a little bit more of slightly down for 12 weeks. So when is that going to start? This week, next week, the week after? Well, this isn't a price that's okay. It is resistance. It's not really a primary level of concern for me as a bull. So what I would assume in normal circumstances is that this comes up, comes down to the moving averages, and then goes up. That assumes risk on. That assumes stock market up. Okay. So, all right. So that's in play. But if it presented as sort of a reversal pattern, probably not today, but like between today and tomorrow, then you should pay attention to it. In particular, if other yen pairs stop going up. Remember, that's not a prediction of reversal. It's a prediction of this is a price in which people might want to take profit. And the reversal begins. Okay. Okay. All right. Look at that. Holy smokes. Okay. This is the projected high for the month of June. 94. That's supposed to be a 9. 9. That's a 94. Holy smokes, is that on fire? Look at that. So this month we had a bottom, okay, at 90 point, I don't know, 67 or something like that is the one I care about. I'm not necessarily looking at that bottom. I'm looking at, to be more precise, I'm looking at this bottom. Okay, the up, the down, and gone. And that predicts this price here, 94. So If one of two things happens. If this goes higher, these are risky, dirty pips, and you got to be careful. And I would expect it would continue to go to R3. That's a big, crazy month. What typically happens is that bears now have permission, or I mean, bulls have permission to take profit. So there's some profit taking. This comes down, forces some other traders to get out of their trades, or maybe stop losses are hit. And then if you get a reversal pattern like a double top, then bears are now actually selling. Remember, a bear cannot actually sell until there's a reversal pattern. Otherwise, they're just a fool and it doesn't matter. Who cares? Okay. But a real bear can only sell with a reversal pattern. And then after that, a bearish trend of lower highs and lower lows. So none of that exists at all and won't happen for days. But if it did appear, it would happen here. So through the 21, right down to the 55, maybe a lower high, which is also a reversal pattern down to there. So that's what I'm looking for, like a hawk. And now the interesting thing is, will all the yen pairs do something like that? That's the other thing I'm looking for. I'm not really interested in just Aussie yen. Well, what about some of the other ones, right? All of them. I want all the yen pairs to be coming down. Okay. If you look at the Japanese stock market, which is going to be one of our leading indicators of potential maybe reversals showing up in the yen pairs. Remember, it's seasonal. So it wouldn't be unusual. We're just trying to find the logic and rationale for it this year. Well, this is the conservative projected high for the Japanese stock market. We'll call it 32,750. Oops, 750. Okay. And we got close to it, tested it, and it was rejected down to the 55. What's next? The double top. I don't know if it's going to double top. It's a binary question. If it does though, how are you going to react? Well, if you're long, you should probably take profit. And the next plausible, if you're going to use technical analysis, is down. That's what a reversal pattern in an uptrend at resistance does. And remember, it's the projected high. So if it reverses here, it's probably legit. And it's backed up by seasonality. What does that mean? It usually falls this time of year. Oh, whoa, okay, all right. You add that to your vision for the future, and of course, if that reversed, all the yen pairs are going to come down. That's at least that's what the correlation is. So all of a sudden, you can imagine maybe maybe this week, let's say euro yen goes up, hits this area, and then Japanese stock market falls, and then okay, goes like this. And people will tell you, "Oh, your broker hunted to your stop." Oh, that's market makers clearing the market. Uh huh. Whatever, dude. No, maybe it's the sky. The sky's falling. Yeah, the sky is falling. Yeah. Kiwi. You remember how all these other assets are way up high, right? Like we're talking about hitting this area. Kiwi's not even near that. But I'll tell you, you should be worried about something like this. So now, if the Aussie yen comes down, the pound yen comes down, the Japanese stock market, the Nikkei comes down, this one will fall first because the Kiwi is so weak. Okay. Okay. I could point out the other ones quickly. CAD stuck on its R1. It's like one of the others. So, anyways, that's just sort of the food for thought for the morning here. On one way to use QuantBox is to say, is it possible technically, maybe not fundamentally, maybe not economically, but is it possible that technically we're going to lose volume and volatility as we go into the summer? And things that were going up will kind of slowly head down, and things that were falling quite dramatically will probably kind of fizzle back up as more traders are exiting the market for profit than new traders are coming in trading the opposite direction. It's just more like people are leaving, putting some money in their pocket and kind of leaving the market. Yeah, well, just sort of a heads up. That's why we have seasonality. And I'm trying to show you how to combine them a little bit so that you can say, well, it might not be happening now, but maybe in the future. Okay. This is a week where we have a lot of central bank speak, a lot of central bank decisions like the Fed on Wednesday. So you're going to get the market to behaving in ways that are not necessarily logical. Like all of this, when you do quantitative analysis, it just means you're not thinking, you're just doing math. It's just math. Okay. You're just making observations of the economics. And then we're trying to then use some of these leading indicators, technical analysis and seasonality, to kind of predict the future. But over the next 2 or 3 days, you can have non logic prevail as people are worried about what the Fed's going to do next. Okay. So maybe this is a week where you take a pause from trading and you take a focus on analysis of like what should you be doing the next 6 to 12 weeks? Because there's a good chance of all the trading that we've had up until now. Let's say how about this? If you look at things like seasonality, the trading we've had over the last 12 weeks is not likely to resume the next 12 weeks. And so if you do whatever you did right the last 12 weeks, it's not going to work the same the next 12 weeks. And you're like, but maybe I'm not right using the right moving averages, or maybe I shouldn't use MACD, maybe I should use RSI. No, 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 no. You're doing the same thing over and over and over again, but the market's changing and you're not adjusting. So you're applying the wrong, let's say tactics to the market conditions. So anyways, so maybe this week, while we know there's some big central bank news that's in the way and it's changing the dynamics of the market, maybe you think a little more broadly and say, well, what am I going to do this summer? And go through and say, look at the assets on QuantBox and reaffirm mentally and spiritually, if you will, what typically happens over the summer. Okay. This would, to say it in a different way, maybe this week or at least the next couple of days, it's an opportunity for you to sit down and sharpen your sword. Because you're a killer. Cool. Peace on earth. May the pips be with you. May our profits be above average. Have a great trading day. I will see you later soon, I'm sure.